You're also watching Business Breakfast. Let's look at the market now. The Nigerian bourse ended the week on a positive note as market sentiment remained green. The NGX All-Share Index closed the week with a 2.61% against 2.43% recorded the previous week. The Nigerian exchange gained about 698.74 billion in Naira terms. Year to date, remained positive, closing within 19.24% gain as the market capitalization settled at 27.46 trillion at the end of the week. A total turnover of 1,598 or 1.5 billion units of shares worth about 19.6 billion naira. In about 21,000 days were traded last week by investors on the floor of the exchange, in contrast to a total of 8.2 billion shares valued at 49.14 billion that exchange hands previously. In terms of sector performance, across sectors tracked now, at the close of trading last week, consumer goods recorded at highest gain for the week with 7.21%. The financial services followed, which was measured by volume, led the activity chart with about 1.05 billion units of shares, which was valued at 7.7 billion, traded in about 8,000 deals there, thus contributing about 66.15% and 39.42% to the total equity turnover, volume and value respectively. So let's get started now. Mr. Ambrose Amodian, a Chief Research Officer, Investor Consulting Limited. He joins us now. Thank you for your time on the program. Just before we get into the market this week, give us an overview of what happened last week. Last week was heavily, dominated, and the rally was very impressive as well. So what would you attribute the current positive sentiment we're seeing in the market to?
Yeah, actually, I would say that the bull run is still intact, as we just said, because one, the earnings of these companies are impressive. One, the uptick in inflation, just as you've said at the intro, that we expect the inflation to also hit 16 and above for the month of April. Design investor in the fixed income market are saying that, yes, because we have not seen the body language from the CBN or the monetary policy that they're hiking rate in their next meeting. If they're going to do that, we have started seeing, I know, rumor and all those things, but as to speak now, it's still silent. They too, they're also reading the attitude and the body language of the policy makers in that angle, that they are not ready to increase rate until we cross into the second half of the year. Meaning that in the next MPC meeting, we might not see increase. Automatically, if inflation still go up, it's going to put most of their position in red. On that, they are moving to where they can hedge against inflation, seeing that most of the earnings yield and the dividend yield of these companies on the exchange are also higher than what they are seeing in the physical market. And also, as the war in Ukraine lingers, they are bound to be that there are some sectors that are going to benefit from it, and that is better the position in those companies in that sector that is going to position for it. And also, what is also happening in the economy, also, there are some sectors that are going to benefit from it. For that, they are moving their portfolio to position, that's why I call it a portfolio reshuffle, looking for fixed income, looking for where they can hedge against inflation, at the same time, like a safe haven or a defense place to protect the capital they are trading with. That's why you see there is still demand in the equity market, and that will continue until we see the Q2 number. But one thing is that investors in the market should not be carried away with price galloping. Because when price is galloping like this, you are bound to know, because you are happy, the market that take you up also bring you down. That is why your entry and your exit strategy should be at your feet to guide, at your fingertip to guide you, so that you know exactly what you are doing in the market. Don't be carried with market gyration, because at times when you are too happy that you are making money, before you need, there's some stock that you have made almost 100% before. As you speak now, some of them are ready to almost 40% because you didn't take profit when it was 100% because you are greedy. That's why let their goal guide them exactly what's your profit target. Like this morning, I've kind of sent out profit taking a lot for some stock. Just take profit and know that, yes, this one is for me now, and now come back to the market and all that stuff. That's what you do. Don't be carried away with market direction. And I said earlier, as far that this thing is lingering, there are some sectors going to benefit from. Then, as an investor that is designing, move your portfolio to that sector that you know they're going to benefit from what is happening globally and also in the economy. But as I speak now, since we have not seen that body language, there are some sectors that investor benefit. But don't forget also the high cost we are seeing. If you look at what we call a producer price index (PPI), you can see that the material sector are already feeling the heat of the high cost. Then you can see what is happening in the aviation sector. Also, the material also they are also feeling the heat. That means for them to really remain in business, some of them that are able to pass this cost to consumer will still remain in business, still post profit. But those that are unable, going to affect that. That is why most of them are claiming that let government do another intervention, either by way of sending money or by way of changing their policies. But we believe that what is happening globally is part of what is driving high cost here. But for investors, no matter the uncertainty in any environment, take advantage of information and profit from that uncertainty.
You talked about the fact that, I mean, we're not seeing the body language from the CBN is still very silent, and so the market perhaps it's still very silent reacting to that. But don't you think that it will be too early for market to start reacting, perhaps what may come from CBN at their next MPC meeting?
The fixed income market know that if there is no rate hike,
right,
there are some sectors they want to bring for rate hike, especially the banking sector. Most of their activities will improve, interest will go up. Also, some we can see also uptick in the fixed income side. But now that in the next MPC meeting, which is around 22 or 23 of this month, if there is no adjustment in price, that means we're talking of in the next that is in the second half of the year. Then for them, they can make money in this market, because I tell you, after May, June, August, in July, we are seeing second quarter number. Market also react to that number. That is why you see those in physical market, they are seeing that the long curve or the long bonds won't pay them much than they come to either the short bond and also equity to hedge against it, because it's equity and real estate you can use to hedge inflation when it is at this stage, and that is why they are looking at it so that they can protect their capital. I'm telling you, even you are a novice in the market, you want to make sure your capital you are trading is preserved, because if there's no capital, even when market is rallying, or you won't partake in it. But that is why the one you have, that is why those fixed income traders, they are not sleeping. They know that, there's opportunity for us to create money, preserve my fund, at the same time grow the capital. That is why they are moving the view of equity. Because as we speak now, those companies are able to pass their cost to in consumer, their earnings will be positive. At the end of the day, they're going to grow their dividend. Their dividend will be higher. That is why you are looking where is these sectors at an edge against inflation.
I mean, let's also dwell a bit of that. Should the CBN decide to jack up like other countries are doing at the moment? The Federal Reserve just up their their inflation rate, I mean their interest rate by 50 basis points, and that has changed a lot of things around the economy. So with that, following that global trend, should the CBN toe the same line, I mean, by jacking up the interest rate, what will be the position of investors? Whether to put in more fund in the equities market, or perhaps they might want to remain in the fixed income market?
Actually, like the question is very correct. If they decide to do so, but I believe that it might not be in this next MPC meeting. Right. And they are doing it in the next MPC meeting. It can be at 50 points, just like what we saw in US, increasing the rate with 50 points. Remember that the Bank of England did their own 25 points. They might start to say, here, let's come back here in Nigeria, let's do 25 points. That means from 11.50 now, 11.50 now, then we'll now move to 11.75. 75. You see, that also give a room. That means the equity market can still flow, but when it crosses 12, that is where things will change in the physical market, it will change in the banking sector. But now to speak now, I think for me, this is not the time for them to panic. But we are not seeing it. But also, even though when there is increase in the interest rate, there are some sectors that what is going to return will be ahead of even inflation and what interest rate. That means investors should look at which sector I know that activities there, opportunities there will still support the earnings at the end of the day, where I will be ahead of inflation and also ahead of the interest rate. That is good.
Now that everyone seems to be battling, all the major economies of the world seems to be battling with inflation rate, and then it's also trickling down to sub-Saharan Africa like Nigeria. So, I mean, let's look at some of these sectors here. For instance, last week, the consumer goods sector went up by about 7.21%. There are other sectors, of course, which also perform, but it seems the consumer sector was the bride of the day, which dominated the market last week. I mean, do you think that perhaps the investors may consider this sector as more of a safe haven than other sectors? Because at the moment, even the oil sector, for instance, yes, it's doing well, but not as impressive as what the consumer goods sector is doing.
No, it is just for a week. Consumer goods, there's always variety. Because investors or consumers in that sector, when you continue to jack your price, there will be consumption will drop. It's just simple economics. When there's increase in price, you're likely to see decrease in demand in consumption because price is that. But now to speak now, because of the earnings coming from the brewery sector, we're seeing that it's moving the market. That's why I see the life of also Guinness, International Brewery, and Nigeria Brewery, champion, because they are gaining. That is why we are seeing that kind of. But also with recent expected increase in sugar, we might see that sector also going to look up. But I will tell you, in that sector, there is how far they can adjust their price up. If they do that to a level, consumption will drop. And also, if this high cost of production also we are seeing continue, it's going to also eat into their profitability. For me, the area investors should also look at, it's a good sector, but the area they look at is the area of this oil sector.
Let me intercept you a bit. Perhaps you need to show us maybe the chart talking about the consumer goods sector. Perhaps I think it will help us to better understand where this sector is headed, given investors' sentiment in the coming days. Perhaps you have to show us that.
If you look at it, it is the chart for consumer goods index already on display. You can see that the chart, the sector is trading above, the T line above 7 days moving average, 8 days moving average, 20 days. It tells that the sector is strong. But you can also, if you see the last candlestick performance, you can see that there's a sign of weakness already here. That tells you that profit taking has hit that sector. That means from this week, people are bound to take profit from those rallies that we saw last week for the sector. For me, building your portfolio is against the future. If this sector, a level, as I said earlier, that there's a level they can pass their prices to consumer. But there's settled that whether there's increase in price, the demand will be high. That's where investors should also be looking at. What is happening in Ukraine and Russia will continue to impact the oil sector. The telecom sector will remain as far, even though there's they jack up their tariff or not. The consumption for data and also usage of their services will remain at the top. That sector also expect. Also, if you look at the banking sector, if peradventure at the end of first half, second half, they increase the interest rate, it's going to also impact the banking sector again. For me, these are also, don't forget that agriculture sector is a place that investors should look at, especially what is happening in Okomu, Presco, and even livestock. You should consider that if we want to feed ourselves, we really want to look at that. And also those companies, especially Okomu and Presco, they are also earning forex from their export of the product they are doing. That's why I see our federal government is even looking way of going to palm business, because they see that there's opportunity in the market for palm business. For me, I think that way you should look out to play defensive at this point. But go to those companies that has good fundamental in that sectors, or especially their leaders. Also look at what is happening in the construction and the building material sector. These are areas you look at. For me, the consumer sector can always oscillate.
Okay, we'll go into some of those sectors. Perhaps give us your top 3 sectors, but we'll quickly take a break. And when we come back, we'll use the chart and look at the way forward for the week. This is Business Breakfast. When we come back, of course, we're still talking about the equities market and the investment opportunities and where the market is headed in the week. We're back in a moment. Please stay with us.
Are you a business owner looking for the right exposure to attract massive clients to your brand? The long search is definitely over. SME Hub allows you to showcase your products and services to a wide range of viewers and buyers nationwide. For further inquiries, please call Alero on 081 323 43262, or you can send an email to alero.ogudere@ibrandtv.com. Grow your brand and boost your business on SME Hub, live on iBrandTV, where business comes first.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services that meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Yeah. Swift Dry Cleaners Limited. Yeah. For clean wash and quick delivery. Yeah. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. For clean wash and quick delivery.
Swift Dry Cleaners. Clean wash, quick delivery.
Glad to have you back now. This is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. Mr. Ambrose Omodion, Chief Research Officer, Investor Consulting Limited, is still here with me looking at the market and the performance of the market last week and what will happen this week. Well, Mr. Ambrose, you were talking about some sectors that investors need to look at, apart from the consumer goods sector that we'll talk about. So what are your most top 3 sectors that you think investors may want to, the investors may want to play around this week?
I will, when you say consumer goods, if you add agricultural sector, fine for them, but I would say let them look at the agricultural sector, one, look at the industrial goods and the telecom. For me, I think these are sectors they should look at now. Agriculture, telecom.
And what are your reasons for this?
For agricultural sector, as far as these are the agriculture and the and the telecom are the one driving the nation GDP, our economic growth. If they are the one driving the economic growth, that means there's what to make from that sector because they are the ones supporting the growth. That sector is expansion. And when it's expansion, it's going to impact the company in that industry on that. That's why those 2 sectors are there. Look at what is happening also in the industrial goods, especially the building material. Talking about the Dangote, Boa, Lafarge, and the Julius Berger. These are called the production company because of infrastructural gap. That means as far as we're trying to bridge it, but I can see that government has last week said, they want to close the housing gap in Nigeria. They can't do it with water. You're going to use cement and construction. That means there will be business activities for them. Like what I said in one of the programs, that what is even happening in Ukraine. There are some even Western countries that are already positioning that anytime they want to rebuild Ukraine, it's a business for them because after we are damaged, the construction companies, cement machine company in that environment, we also have business to do. That is why what is happening as far as we're having infrastructural gap, we expect that this business for Boa and other will also continue. And also they are successfully also increase their price of their product. That is a plus for that sector. That is why the earnings coming there will continue to look up. For investors that want to play defensive, these are the sectors you look at: industrial, communication, agricultural sector. These are where you should go.
Let's look at some of the, some of the stocks, for instance, the Presco and Okomoye, which released their earnings in the market last week. And of course, what is the strength, the support level for some of these stocks, and how trending this week? Maybe we need to look at the chart and where we're headed this week.
If you look at the chart of Presco, now that is when I see that this stock, they are breaking out new levels. The one new resistance level they're breaking out, and they're all making like almost 15 years high, which is good for Presco. It's for the first time Presco is hitting 170 naira. Also for Okomu, it tells you that there is factor behind this movement, and that is because Indonesia, has stopped exporting oil. Palm oil are not away from. They want to feed themselves to international. Also, Malaysia is also having kind of a drop in their country. There's no farming for palm oil. There's no supply coming out from them. Now that these companies, Presco and Okomu, continue also to export and they are earning forest, you can see that the number they are posting is the best number so far since this company came to Nigeria. That's why the prices are going up, and also they're going to also reflect in their payout at the end of the day. Because now we are making money, you pay money. Stock like Presco, why Presco is very attractive at this point is that one, they recently acquired what we call Fiat Nigeria in Port Harcourt. That means they're expanding their market share. With that acquisition, they have much market to supply. At the same time, that was going to impact at the end of the day the bottom line of Presco. And they said before they acquire the Fiat Nigeria in Port Harcourt that they are breaking even already. That means they are not expecting loss. That means that business should be a plus to Presco. And also there's a rumor in the market that also they want to give a bonus. You can see the price of Presco even at 170 for me it's likely to touch 200 because if the bonus comes, there will be the market sentiment for the company. Investors that in this stock should know what to do.
You wanted to give us a chart, show us where some of these stocks are going earlier. Perhaps maybe we need to look at those charts.
Okay, let's look at Okomu. I've seen for Presco. Now let's quickly for Okomu. Yeah, Okomu for me is also looking good, and Okomu is also trading above the T line. These stocks are making new high. If you see, it's an uptrend. You see an uptrend in this stock. It tells you that there is something happening in this stock. At the beginning of the year, this stock are selling around below 150, below around 142, 140. As to speak, look at the movement here. It tells that this stock has enough room to go. As per the earnings will support the price. I will tell people that in equity investment, what price feed on is earning, and these earnings are positive. It's going to impact on what? On the prices of these stocks.
Okay, let me take you to the financial services industry. This particular industry led the activity chart with about 1.05 billion units of shares valued at 7.7 billion naira in about 8,000 deals. That's about contributing to a total of 66.15% and 39.42% to the total equity turnover last week. What is the trend likely to be this week?
If you look at the NGS banking, I will tell you, as at close of business for the week on Friday, so buyers and sellers in that sector are at equilibrium. There's today that will know whether the sellers will take no charge of the market or the seller. With the candlestick formation at the end of the trading, you can see the chart here on the end of the trading for the day for that last week. It shows that buyers and the sellers are looking for who will take charge. As we speak now, they are at equilibrium. That means this week we'll know whether the buyer will have upper hand or the seller. But it's a good chart because as we speak, even as you said, the chart for banking sector is still above the T line, which is the red line there, and also for me it's a good one for the market. I said earlier that if CBN finally will cross over to the second half, increase interest rate, that will also be a push for banking stocks, and we'll see the index also keeping flying, if the time comes that we'll see this adjustment, and also that's going to impact the banking sector bottom line at the end of the day.
Let's look at the conglomerate as well. Let's
conglomerate don't have it.
Yes, I'm just trying to read some of the the report here. For instance, it did about 148.17 million units of shares, and then of course worth about 250.56 million in about 852 deals there. So that's, of course, the third place was.
No, if you mention conglomerate, you know that Transcorp is a that sector, and there's demand for Transcorp because of what the result was positive. That's why I've seen conglomerate. Also, if you check the trading activities, nearly every day, Transcorp will be among the top in volume because the price is cheap. People are seeing value. They are still transaction. Now, seeing the last Q1 number that came last week, it was kind of that's why I see it's among the the top trader gainers for all kind of activities for the week, because that is a major driver in that space.
So you are saying we should expect the same trend to continue?
Yeah, because the numbers from Transcorp, and that is the major component in that conglomerate that always support the trade because of the volume in that company and also the demand in that company.
Let's look at the top three equities at the close of last week. Union Bank, of course, it's in the news this time around. FCMB Group and, Transactional Corporation, that is Transcorp that you mentioned earlier, which accounted for about 547.57 million shares, what about 2.3. So these three top equities which traded about the worth of what was exchanged last week was about 2.3 billion naira in terms of value in about 957 deals. Do we expect the Union Bank and FCMB and of course these other stock Transcorp also to lead the gainers for the week as well? Yeah,
it depends on the market forces for this week. But I'll tell you that when you see volume in any of this company in the market, it signifies something, give you an insight. You see volume coming out in the Union Bank and also in FCMB and Transcorp. There's something attracting investors. That's why we are seeing that volume. That is a negative information or positive information. That is why, as a trader in the market or as an investor, when you see price going up, you see volume going up, earnings going up, it gives you an insight what is happening. Like what I discussed about how to invest with numbers. When you see that the numbers that are coming from companies are positive, and what they're marketing for market forces are positive, it tells that something is in for the company, and that is why the price will go up. Or if it's going down, also tell you that something. But when you see big volume like this, it tells that either institutional investor are entering that company or they are exiting. That's why you're seeing that kind of volume. But for Transcorp, for Union Bank and the FCMB, for me, it's a positive one. They are not declining. They are still their price is sustained, looking up. Let's see what happens in this new week.
Well, we can't talk about some of the gainers and without looking at some of the losers for the week. You have Oando PLC losing about 74 kobo in the week to close at 556 kobo. Nationwide Express PLC was also part of that was a stock which declined and the week, losing about 8 kobo. That's about 9.88%. You have AXA Mansard Insurance. You have Living Trust, Mortgage Bank as well. Well, Transcorp Hotels, PLC, is also part of the decliners for the week as well, with about 45 kobo. So let's look at some of these stocks one after the other. So why should investors continue to hold their position in some of these stocks for the week?
No, for life of Owando, as you mentioned, Owando has been in speculative stocks. Now, for me, since it's dropping, it's not profit taking, because I know that another news or that sentiment for that sector will also support Owando. That means if you see Owando pulling back, it's not that you should run away, but it's a great opportunity for traders. But for those that are looking for dividend income, that should not look the way of Owando as we speak now. But for those that are traders, that are knowing that there's positive sentiment for that industry where Owando operates, can still take advantage of
when
it pull back. Exactly.
Yeah. Okay, so what do you make of Transnational Nationwide Express?
I would say that one just purely market forces.
Okay, let's look at Transcorp Hotels. Of course, we know that, I mean, we've seen a lot of companies in the hospitality industry, but since the pandemic came, we saw that a lot of them have been impacted negatively. So what do you make of this stock?
No, like you just said, they are all coming out gradually because of post-pandemic or post-COVID-19. We're seeing improvement in their numbers. For Transcorp Hotel, for me, it just market forces and sentiment. The number they posted for Q1 was not a good. It was not a bad one. It's a good number. And what we are seeing now is just profit taking in the stock.
We've not seen much activity from AXA Mansard Insurance PLC lately. Perhaps maybe because of the restructuring and of course will you call it rehabilitation, or what do you call it now?
Re-engineering.
Re-engineering that is ongoing in that sector as well.
But
of course. Yes.
But for me, for that insurance sector, with the recapitalization we are seeing and also other reforms we expect, I see there's a kind of a potential for upside movement for those stock. But it might not be immediately. But for those that are long-term investors, I think Mansard is not a bad company to think and to jump into now. Seeing it, just slightly above the book, the par value, it's around the 2 naira 20 kobo, and the par value of that stock is around 2 naira. For me, it's a very cheap stock to look at, because even we know the shareholding structure of Mansard and also the kind of business they are. I believe that for those that are long-term investors, they can think, especially there are few insurance companies I can recommend. I think, but one of them is Mansard.
I mean, did you think that the recapitalization or a kind of reforms that took place in that sector, how do you see impacting in some of these stocks listed on the Nigerian Stock Exchange?
But for me, they are still ongoing. The recapitalization is ongoing in that industry. But the Mansard has successfully done share reconstruction, when reducing their share in issue from about 18 billion to 9 billion. Which makes it attractive. For me, it's a good stock. Look at what happened in NEM too. NEM also did share construction. For me, let's watch and see where these insurance companies are going. But I see that if you want to rank companies in that sector, Mansard will be either number one or number two in terms of performance and in terms of fundamental. For me, it's a good one.
Ambrose, just before we wrap up, let's look at the market this week. Of course, earlier the market was doing about 0.1% already in the new week. Well, we do not know whether it can sustain that green light we've seen earlier. But then, I mean, what's your outlook for the week?
Well, I see that the market will also remain in a mixed trend. We have seen a rally for almost 4 straight weeks. I believe that this week profit taking will be there, and also the kind of stock that will do price adjustment this week might not affect the market, because these are low cap stock like Living Trust and others that I know for them. But I believe that profit taking or other news can connect. I say we expect a mixed trend, because people are going to enter a new position while some are selling off. That's why we expect a mixed trend until we start seeing the economic news, especially macroeconomic data. We're looking forward to see the GDP for first quarter. We're looking forward to see the inflation figure for the month of April. And also, we're also looking forward to see MPC meeting coming the same month. For me, this month, I think that this month will be a mixed month. But for this week, let's expect a mixed trade. But already the market is in green. It's a good start for the day. But let's see how it's going to close at the end of the day.
I think we need to leave it there. Thank you so much, Ambrose Omodion, Chief Research Officer, Investor Consulting Limited. We appreciate your time on Business Breakfast.
Thanks for having me.